Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Thursday, May 20th, 2010. This morning we're talking about the Great Unwind. Now, I often talk about carry trades in the currency market, which sort of go hand in hand with risk-taking when we talk about the risk themes that drive daily price action. Now, when there's confidence in the financial markets, investors will take on risk and they'll go out and they'll seek yield. And the way they do this is by selling the currency of a low-yielding country and buying the currency of a higher-yielding country. All right, and what they do is they capture that yield differential. Okay, and that's known as a carry trade. So the quintessential pair for a carry trade is the Aussie JPY, okay, because Australia currently has the highest interest rate of all of the most commonly traded currency pairs, and Japan has the lowest interest rate. In Australia, it's currently 4.5%. In Japan, it's 0.1%. So if you own this pair, you're essentially making 4.4% interest, which hey, that's pretty good in today's environment. Okay, the problem is that when financial markets don't seem to be stable and there's not a lot of confidence, all right, people take risk appetite off the table and now they become risk averse. All right, and as things start to look worse and worse, what they'll do is they'll start to unwind these carry trades and head to the flight to safety of the US dollar and the Japanese yen. And that's what we're seeing here with the Aussie dollar. I just want to show you a 1-year chart here. Let's take a look. Here's Aussie USD. As you can see, it's down 1.58% today. Okay, and you can just see this chart, boom, it's just falling out of bed, broke what looked like some near-term support at 86. All right, and how much further it can go, we could see next stop around 78. So if this euro debt crisis continues to weigh on global markets, we could see a lot more risk aversion. Now, we'll also just take a quick peek at Aussie JPY because that's the one I'm talking about. And as you can see here, these moves are more violent as this is a very common carry trade. And you can see how Japanese yen is strong across the board. It's up against the loonie, even though the loonie doesn't really have that much of a carry trade there because there isn't that much of a interest rate differential. I believe rates in Canada are still low at about 0.5% versus 4.5% in Australia, but you also see this with the Kiwi as well. Okay, now in New Zealand, basically what they've done is they've decided that in order to get their fiscal house in order, they are going to lower the income tax, but they're going to raise the sales tax. So they're hoping to encourage some savings there and trying to get people to reduce debt while the government does so as well. Okay, in the meantime, Aussie's down as gold prices are down. I saw a 178 handle recently, and oil's kind of affecting the loonie down to about 68. So that's what we're seeing here. That's kind of what's happening so far in the market. Now in the eurozone, we know all about the euro. Well, you can see the euro's higher against these commodity currencies here. This is we're looking at Euro Loonie here, which is up. We can also look at Euro Aussie, which is up, but you can see how it was down just for so long on a daily chart. Okay, also carry trades taking place there. So that's kind of what's happening. Okay, it's not because there's euro strength and people think it's a good currency. Just people are afraid of the risk in the market and what's going to happen if there's a global slowdown, possibly a double dip recession. So that's what we're seeing there. Pound is a little bit mixed today. Same deal. Pound's higher versus commodity currencies, lower versus the rest of the big boys. Retail sales were actually higher in the UK for the third month in a row, but this could be a short-lived phenomenon because obviously these numbers are a little bit lagging. So we're going to see what happens there. In the US, just take a quick look at US yen here. All right, it looks like it's sort of made a turnaround, and because of this flight to safety, people are actually selling dollars versus yen. Now, we just came out with the initial jobless claims this morning, which were higher than expected to, I think it was 472,000 versus an expectation of 440,000, which it just shows that things aren't really turning around here. People may point to the fact that continuing claims were lower, but that's probably more of a function of discouraged workers just actually running out of benefits and not being able to claim any longer. So that's what's happening there. So in addition, in Japan, they came out with their GDP figures last night. Okay, and it came in worse than expected at 4.9% versus an expectation of 5.5%. So while they've been having this export-led recovery, it didn't encourage consumers to spend. Okay, and the fact that the yen is getting a bid here and it's strengthening, okay, due to risk aversion, that's going to affect their exports going forward. So what we're probably going to see is the Bank of Japan, they're going to have to do something to battle the deflationary problem that's been plaguing Japan for years. I expect the yen to be get strength until this thing turns around, and then maybe carry trades will come back if things start to look better. But right now, what we're seeing around the globe is what I'm calling a global ratcheting down of the economic bubbles that have been allowed to go on for the past few years. All right, as different economies around the globe, they pare back. They're talking about austerity measures. All right, they're trying to get their debt under control, but the natural consequence of that is that their economies aren't going to be growing as much. So if the economies aren't going to be growing as much, there's going to be slowdowns. All right, things have to come down in price. It just has to, unless of course we just see massive money printing, which hey, that's what we do here in the U.S. But the rest of the globe isn't really taking that tack. They're saying, hey, you know what? Maybe it's time to put the brakes on, and let's just try and get a stable economy, one that maybe not be growing as fast, but something that's more stable. All right. So because we have this fractured world economy, where you have competing interests, different leaders, different cultures, different backgrounds, different ideas, it's going to be real hard for people to kind of come around to how we're going to come up with a solution for this. We're going to see possibly some debt defaults, I'm guessing. We may see money printing, which I mentioned as well. That eventually will lead to global inflation, but I don't see that happening anytime soon. I mean, this could be years away. I mean, this basically is what happened in Japan. So right now, if you're in the markets, there's some great opportunity here, to help shore up your own balance sheet by making some gains here in the Forex market. But, keep an eye on what's going on around the globe, but you really want to concentrate on getting your own house in order, and if you can add to it through gains through the Forex market, hey, more power to you. So that's what we've got today. Keep an eye on the risk themes and news coming around, and we'll see if these U.S. stock markets can rebound a little bit here and try and reverse some of these losses we've seen. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.